All right, now let's get into our latest news update then, and we focus on the markets in particular. And it's certainly been a green day across the board by the seams of things. More positivity coming back into the market despite a second wave of coronavirus cases, which have certainly come into this market sphere. So a lot of the Asian markets did manage to tick higher, though. Unfortunately, the picture out of Japan wasn't necessarily the greatest. So the Nikkei index went down around 0.5%. The retail sales figures out of the United States have seemingly brought some sense of positivity then into this market picture, rising by a massive 17.7%, which is bigger than the 8% analysts had actually expected. So that pointed to a better recovery then, clearly, in the global sphere when it comes to the economic picture. So that's why you're seeing a lot of green across the markets and the board as well. So the European market as well also headed higher quite significantly as well this afternoon, around 0.2% for the FTSE in London and the DAX out in Germany as well, with more than 1% gains for the CAC 40 as well out in France. On the local front, nearly 3% higher. We've seen a lot of profit taking, so the market went down for quite a significant amount of time, but now we're back headed towards 54,000 points, so some positivity continuing to come back. Of course, yesterday was a public holiday as well here in South Africa, so the market didn't necessarily move as much, so we're getting in those trades as well, perhaps coming through into this market picture. More than 2% gain for a lot of the sub-indices as well, the banks, the financials, resources, with the industrials going up 3.5%. So the biggest gain is today as China moved up. So certainly the likes of Naspers as well added to that market picture as you see that gain there, more than 2% higher for the gold indices as well. Onto your commodities board, not a great day for the oil price there. The second wave of those coronavirus cases unfortunately impacting just the demand picture that seems to be coming through. And also we had a rise in the number or the value then of the US crude inventories, which means that the US is stacking up and keeping a whole lot more crude inventories, meaning that demand isn't going down as quickly as one initially thought, which means that the oil price unfortunately won't go much higher. So for now it is down nearly 1.5%, sitting at $40.36 a barrel. It's down for platinum and down for gold as well today, both falling around 0.5% as well in this midday trade. It isn't necessarily the greatest picture, but a slight improvement for the South African currency, 0.8% better off today for the local currency against the US dollar, 17 rand and 10 cents. There was a strengthening in the US dollar having come from those retail sales numbers that we saw out of that economy, which pointed to a better economy on that front, but that is beginning to wane off just a little bit. So the emerging market picture seemingly getting a little bit better there, around 0.9% up as well, or better off for the rand against the euro at 19.24, stubborn 21.50 as well then against the British pound. A whole lot of news happening, I guess, on the economic front. So let's unpack this and chat a little bit about this market picture and why there's a sense of this positivity. Makwe Masilela from Makwe Fund Managers joins us via Skype then as well. Makwe, thank you so much for the time. So positivity all around. All you needed was good retail sales numbers, but we've seen this happen before. Have we jumped the gun again? Has the market jumped the gun?
Good day. Yes, I think we did. We've seen this movie before. But remember, market has been desperate for any positive news, so we'll just hang on that. And every time we've seen the market rallying, the past 2 weeks we saw a nice rally. So as a result, the market ended up being perfectly priced. So meaning evaluations were so high, so meaning there was no room for any disappointment. Hence, when we started getting the disappointments about the second wave of infections, we saw markets acting the way they did. And it only took what we called the retail sales numbers, and bearing in mind that those numbers are even backward looking, and also the fact that we saw the manufacturing activities in New York, they've jumped in June, so that was also positive for the markets, coupled with the nice job numbers that we've seen that other week as well. So markets are saying, listen, the reopening of the economy is important, but now, yes, people are worried about the second wave of infections, but truth be told, I think markets are better prepared, or economies are better prepared this time when it comes to the second wave compared to the first time when we had the COVID-19 infections. Yes, still the nice story, but I think all this positive economic news, which ultimately should translate into good company earnings, are overweighing the concerns about the second wave. And yes, a stronger dollar as well. We've seen what has done as well on when it comes to the gold price. People are taking profits, but for the fact that there is that lingering concern about the second wave, that's helping to help gold prices not to fall too hard. Oil prices as well, as you said in your intro, that we say they built up, but also concerns about demand is just putting a negative impact on that part. The JSE has to play catch up, as we've seen that the US and European markets were nicely up yesterday, so we're playing that catch up. And also the testimony that we were expecting again from the US Fed today. Remember, yesterday he testified. And remember, Donald Trump administration apparently they're preparing almost a $1 trillion infrastructure project. So you take all this stimulus coming into the economy, eventually they should find their way into the real economy and should be able to help the stock prices going forward.
Yeah, so basically the market learning to live with the coronavirus and finding a way forward really is kind of the sentiment we're sharing here. But unfortunately, a sector that won't be able to live with just the way that things are with regards to the coronavirus and its impact on not just the economy, but everybody's pocket as well, is the airline industry. So you've got a whole lot of them, SA Express under liquidation, of course, Comair as well, sitting in some negativity as well. SAA then coming up with that business plan. Your initial thoughts when that came about, an extra 10 billion rand to save SAA and keep it alive in a sense, even though it is the new SAA, so a bit of a weird picture. What are your thoughts?
And initially that will save just under 1,000 jobs. I don't think the government will approve it as it stands. Yes, it's a good thing to say that we'll have a new airline, but we all know that this has not been the intention of the business rescue practitioners. They had to be convinced, they have to be forced to do this because all they wanted to do was to liquidate SAA. But they were under pressure from the unions, also from the ministry, that no, we want a better SAA, a much leaner one. And the guys will only be starting to operate sometime around June, provided they get the money. And we know locally there's huge competition, and they expect at least to start going into regional airlines. Still there's serious competition. Internationally it's even worse. You cannot compete with the likes of Emirates. So I'm not convinced that the department or the government as a shareholder will be approving this plan as is. And we know the guys have postponed ever since. And even the one that we got last night was even late by a day. So I don't think the intentions are very clear. It's something that they just have to put together. And anyway, we don't have the money. Hence, even your finance minister is talking about a zero baseline budgeting. So it's going to be a very tough one.
So certainly gets interesting there. Marco, another thing though is that in order to fund SAA's current deal, that 10 billion rand, it has to kind of come out of the fiscus. So the fiscus then has to be rejigged and reworked. The finance minister, Tito Mboweni, suggested a zero basing when it comes to the budget picture. The 24th of June is just next week, Wednesday, and that's when we're expecting to get that sense of what happens from here with regards to the budget. What are your expectations?
To get to see which projects or departments will lose some of the money, because we know there is this 130 billion that they have to get from the current budget by refocusing or shifting money from other projects, and also to see whether he will manage to win to get his way through with this zero-based budgeting, because it's very critical that we just fund programs based on the importance, based on how much will they help us to recover from the COVID-19 damages that we've seen on the economy. So to some extent it makes sense, but hopefully they will try to have a mix of the two, because definitely the most important thing here, guys, is the recovery going forward. What is it that we'll be doing to make sure that at least we don't just even get to where we were before, but at least we're able to survive, because there are some jobs that's going to be lost. So it will be very critical whether the guys will be able to get the zero-based budgeting, and more importantly, where is he going to get that 130 billion, bearing in mind that he doesn't have much of a choice but to get that money, because it's already been factored in that 500 billion stimulus that they spoke about. And also one would also like to hear how far they are when it comes to the likes of IMF, the likes of World Bank, when it comes to getting money from that side. We know their progress when it comes to the new development bank, about that almost $1 billion that they should be getting from that end. And if there are any conditionalities that the minister will be ready to share with us, if they will be tapping into those two institutions, which is the IMF and the World Bank.
Yeah. Is the zero rebasing perhaps something that you approve of, something you think can certainly be achieved and is necessary for South Africa, and the ability to have a fresh restart, so to speak?
It is necessary, and it doesn't just have to have a fixation exactly on 100% zero-based budgeting. But here we are saying we have to do whatever we have to do as long as it's going to benefit the real economy, as long as the real people will get the real benefit out of all these things. We know that sometimes you have efforts where you get the market just to benefit out of that, or to find that that's money coming from the government or the central bank. But this time we need something which is real, that will have a direct impact on the ordinary citizens. And if zero-based budgeting is going to give us that, then why not? But we have to shy away from having fixation on things. Let's just think out of the box and work with whatever is going to be beneficial for us.
Yeah, will get very interesting from here on in. That budget picture will be set next week, Wednesday, then, by Finance Minister Tito Mboweni. Makwe, appreciate the time. Thank you so much for that. Makwe Masilela there from Makwe Fund Managers, helping us unpack that market picture, giving us his thoughts as well then when it comes to the budget picture for next week. That reappropriated or reworked budget, shall we call it, is what the Finance Minister will be releasing next week. It will certainly get interesting to see just where South Africa goes from here on in. All right.